Hi, I'm Jessica Rudnicki with Reynolds and Reynolds. Welcome back to Connected. Today I'm speaking with Supervisor of Remote Software Implementation at Reynolds and Reynolds, Rebecca Weingand, about end of year in the accounting office and preparing for 2021. Let's get connected. Rebecca, it is so great to have you on the podcast today. Thanks so much for joining us.
Hi, Jessica. Thank you so much for inviting me to be here today.
Of course. We're really happy to have you because this is a timely topic and we wanted to make sure we covered it. Pretty soon, as you know, business offices throughout the industry will begin preparation for end of year processes and the new fiscal year. So Rebecca, what can you tell us about that process?
Well, Jessica, I think I can speak for us all when I say we are ready to look ahead to 2021. For the accounting office, we know how busy year end can really be for them. There is a lot that goes into making those processes smooth, closing out those books. And in the midst of all of that, they really need to be looking forward to what changes are coming in 2021. Proactively looking ahead will help the office and the dealership ensure their financial statements will remain compliant in the new year.
Absolutely. But when you say compliant, what exactly do you mean?
So each year, manufacturers have the ability to make changes to their financial statement. And many of these changes don't affect the dealership, but there are three main categories that will affect the dealership personnel. And that is adding accounts, removing accounts from their statement, and renaming accounts. And this takes a toll on the dealership because these are changes that they have to make. So, for example, if the OEM decides that they want to see a further breakout of their labor service charges, the dealership, in order to accurately report those dollars, will need to add new general ledger accounts into their system so that those dollars can accurately be reported to those new financial statement accounts.
Okay, so there are a lot of changes that need to be made there. Are there any other changes in addition to the ones that you mentioned on the account that dealerships are required to make?
While account updates are important, and they need to get all of those accounts into the system so they can start using them and accurately reporting those dollars, to most effectively utilize the DMS, we always recommend that they update their specifications to go along with it. So having those proper accounts and the specifications will allow the office to run way more efficiently. So going back to our example of the service labor charges, this may mean for the dealership that they are updating their service journals as well as other miscellaneous service specifications, as well as updating their daily operating control or DOC to ensure that they have proper reporting of those dollars.
Rebecca, it sounds like a lot of updating and changing. So I'm just curious, how long does it typically take an office manager or a controller to complete all of this?
So that is a great question. And the amount of time required really depends on the manufacturer's changes and what they've decided to do that year. The main variables that'll go into this is what types of accounts the manufacturer has decided to change, and what, if they're adding or removing more accounts. Also, the comfort level of the dealership employees, and if they have the knowledge to actually make those changes, and then just the sheer number of changes that the manufacturer decides to make for the year.
Yeah, that makes a lot of sense. So Rebecca, what tips or suggestions do you have for business offices as they're preparing for the new year? So is there anything specific that they should be doing to make this process run as smoothly as possible?
Yeah, so things that we would recommend to kind of help make this process run as smoothly as possible would be, first and foremost, be proactive and not reactive. Watching out for those communications from the OEM regarding their changes that they're going to make in 2021 so that you can prepare and look ahead. Also, watching for communications from Reynolds. Reynolds will be sending out some tips and tools that can be used to help with end of year. And once you have those, identify what the extent of the updates are going to be for that year for your manufacturer. And then evaluate. Do you evaluate your knowledge? Do you have the knowledge and the time to make those changes? And if not, can they be delegated internally? And who can you delegate them to? And lastly, know and use your resources. Know what resources are available to you and use them. So, OEM accounting manuals are great resources. The Reynolds www.my.rayray.com EOY page always has great information about what is being updated. And contact Reynolds to determine what services we may have available.
Yeah, well, those are all great resources that you mentioned. So thank you for sharing them. And they all sound like really tangible things that can be done to make this process as easy as possible to do. So thank you for sharing those tips. While we have the audience today, is there anything else that you would like to add or share?
Yes, don't stress out. Making updates required by your OEM does not need to add stress to your end of year processes. Use the tools we discussed today to work smarter and not harder.
That is the best advice you could give. So thank you for giving that advice. And thanks again for being here today, Rebecca.
Thank you so much, Jessica.
Rebecca shared some great information on why it's important to start thinking about financial statement updates now and what you can do to prepare for the upcoming year. Before we hop off, just a quick reminder, you can watch or listen to past and future podcast episodes on YouTube or Apple and Spotify podcasts by searching for the Connected Podcast. Subscribe on these channels to get notified every Wednesday when new episodes are released. Thanks for joining us. We'll see you next week.